Ciao, everyone. Welcome to the Cannabis Marketing Live podcast, where we cover the most effective marketing trends and strategies to grow your cannabis dispensary, delivery service, or brand. I'm your host, Guillermo Bravo, and today we'll be discussing how strong C-suite relationships trigger high-growth cannabis companies. We're joined by founder of BKLY and CMO of Pleasantries, Jim Anstey, and fractional CFO, Darren Garcia. Welcome to the show, guys.
Great, thanks for having us. Yeah.
Just a little bit about Jim. Jim transferred from the US from London 20 years ago with Saatchi & Saatchi to set up an integrated marketing agency in New York. During his time at this agency, he worked for leading global brands in fashion, retail, beverages, CPG, and pharmaceuticals. So Jim's career, he started back in 2016 in the cannabis industry with the startup Olo. He's also started his fractional CMO consultancy company called BKLY. Since then, he's worked with the leading brands and retailers in the cannabis industry in California, Michigan, and Massachusetts. And this includes Wonder Bread, Kinslips, Kanye Co., Medcare Farms, Mitten, and Cloud Cannabis. And he's currently the CMO for Pleasantries. Then Darren served as the CFO for 3 cannabis companies since 2018. Sozo Companies in Michigan, 315 in Michigan, and Eden Enterprises in California. During his 10 years here, he also had dual responsibilities as an acting CEO and acting COO. So Darren spent nearly 20 years in financial markets as an investment analyst at institutions including Morgan Stanley, Guggenheim Partners, Citigroup, and UBS. Darren advised C-suite decision makers regarding capital raising, both debt and equity, including IPOs, and connected companies with capital through firm-leading corporate access efforts. So before I kick it off, I'd like to give a shout out to our sponsor, Mediajel. Mediajel is the leading marketing platform helping cannabis brands reach consumers through their compliant ad network with real-time reporting and analytics dashboard that tracks the customer journey all the way up to the conversion. All right, so thank you everyone once again for joining and logging on today on Zoom and beyond on LinkedIn, Facebook, Twitter, and so on. Feel free to ask your questions here within Zoom or within the appropriate social media platforms, because we're going to be covering a lot today. I'm really excited to have these Jim and Darren both on the session today. So we'll just kick it off with the first topic here. Jim, what does a CMO want and need from the CFO?
Fantastic. Look, well, thanks, Guillermo. Thanks, Mediajel. Thanks, Darren, for joining me. I think, look, I've been lucky enough to work with lots of different CFOs and lots of different cannabis companies. So it's great to, I think, first of all, the sort of vision of the company has to be clear. I always start off with a good insights phase into, who is the company, what does the company want to be, and, what's the background to everyone there. And so I think with the CFO just being part of and really giving good insight into, what the financial status of the company is and how much capital they've raised or what they want to raise, and really understanding first and foremost kind of what, where the company stands, the CEO's vision, CFO's vision, that's key. So I think, and then really kind of throughout, I suppose the second phase for me is the planning phase. So really being on board and having clear communication during the marketing planning phase and kind of buying into the marketing plan and the sort of the KPIs and what, I suppose the marketing plan just lays out where you are now and where you want to be, and the sort of, the financial implications of what that's going to be and the time implications and different tactics and levers you're going to pull, and sort of, how you're going to get from A to B. So being on board with that plan and having input onto the plan and buying into the plan is sort of key. And then, and then in terms of the KPIs, I think just a regular check-in, it could be every week. I know talking to Darren, he's got some great things he does every week in terms of his reporting there, but really tying in on the reporting and tying on the KPIs and understanding, businesses aren't always as linear as you hope. So you have to sometimes kind of, you get faced with challenges and the sort of dodge and weave that happens within businesses, when a new competitor starts up just next door to you, or something similar, I think, again, having that good communication, open communication is essential. So those are some of the things that I think, that a really good CFO makes or helps you with.
Wonderful. And then Darren, what does the CFO want and need from a CMO?
Well, I've worked at a few different types of companies. I've worked at ones that were vertically integrated. I've worked at ones that were retail only. There's a little bit of a different cocktail for each, depending on what you're doing. I think the first really comes down to communication on a constant stream. Generally, when Jim was asking about budgeting and planning and kind of knowing the parameters by which he can maneuver and understanding the capital that's available, all those things that I know a CMO would want to know. And I think that conversation for me has always been a little bit dynamic. Just to use an absurd example, if I say you have $1 trillion budget, a marketing person will spend all $1 trillion, right? And I know that's and we know at some marginal point you have diminishing returns on that. So I'm generally a person that likes to look at things kind of case by case, try to figure out what the returns on that'll be, and that really comes down to partnering with the CMO to understand what the tracking metrics, or kind of more commonly known as the KPIs, are, and doing that, and really getting on a cadence. Like usually, I like to have weekly reporting, through a series of charts and just across the whole business, but kind of looking and saying, okay, we're doing this. How is this tracking? What's tracking well? What's not tracking well? How do we kind of course correct in small ways to do that? But to do that, you really have to have a good rapport and an open communication and dialogue with the people you're working with, especially the CMO. So that's the key thing.
And from both your experience, where does the disconnect between the two usually lie?
Jim, go ahead.
Good question. I think the thing about the cannabis world is different from the non-cannabis world. Is just the pressure in terms of 280E and the tax structure, and as you're raising money, is so tough within the cannabis industry that things can happen that can be out of control. And so I think quite often the first thing that gets cut is the marketing budget. And that's understandable. If you put a lot of investment into a big cultivation facility, you can't suddenly turn that offline. I mean, you put the money in there. So I think it's just, I think being aware of the financial situation, cash flow, how things change, how the macro environment of the company, I think that's quite often really understanding that and being in line with that, I think is important. I think so I think as again the sort of these sort of dodge and weaves that you have to do, I think just really being the good clear communication on that I think is important. And I think just sort of again, I think at a certain level in the company you have to trust the experience of the C-suite, because that's what you're buying into by working with them. And so just really the constant communication and understanding when things have to when the rules have to be bent a bit, or the plan has to change a little bit, really kind of understanding that and adapting as quickly as you possibly can, because the cannabis industry, I think, is by far the most challenging environment. That's why I enjoy it, because suddenly you're throwing something and you have to to understand that and work with it. So those are some of the things that I think are important, or that I found anyway.
Yeah, I think Jim really nailed it, and I would frame it under one word. There has to be a mutual understanding for the constraints. I think there are a lot of cannabis businesses out there that have some constraints, and being in the CFO seat, typically you're trying to manage those constraints without disturbing the herd. Because if certain people know certain things that you do, they'd probably be very concerned. And you have to, and with that, like if you have a good relationship with your CMO, you can have that conversation in an honest way, where you can relay the information you need, probably keep some of the things that you need to know to yourself. But at the end of the day, the CMO is trying to, if you have products, let's say, and you have a wholesale business and you're trying to build a brand, there's any number of things the CMO may want to do, which are completely the right thing to do to build a brand. But, basically processing near-term profitability goals versus longer-term brand building goals becomes kind of the key toggle. And if you can't align on that, it's really difficult. I make my best attempt to have a sense of humor about this sometimes, in different experiences I've been in. There was one where, I kind of refer to the marketing budget as the air supply marketing budget, because you're making love out of nothing at all. And, I sort of looked at it where, you can have that dialogue, and if you can have a sense of humor and you can kind of have an open discussion, which frankly is the most important thing with any management team. If you can't be open and honest about really what's going on and live in the realities of where you are, you're not going to be successful. And I think that that's especially true when you're sitting there and thinking about marketing versus other needs. And frankly, the counter usually where CFOs make mistakes is by cutting marketing budgets. You may actually be cutting your revenue streams and actually putting yourself further in the hole. So you have to kind of understand where that tipping point is if you're in a tight situation, and that's that's something that requires a little finesse. And frankly, you're usually not 100% right on every single time.
Yeah, and one message I've been hearing in this conversation so far is communication. Right, communication is key between the two departments, and making sure that you're aligned and having that open line of communication, so you can, radical candor. Right, it's like in the end, you're a team, right? We have the same goals. We're going to the same destination, and cannabis, cannabis will give you an abundance of challenges, within the industry. And Jim, you highlighted some of them, 280E being top of the list, and funding too, right? So those two items kind of go hand in hand. And it's just finding the right balance, and just being able to communicate effectively and then pivot fast. All right. So it's just making sure that you're aligned, and communication is key.
And I think too, sort of, sorry to jump in, but I know Darren was talking about sort of the air supply marketing budget. So I think too, in marketing, you have to be able to hustle and sort of make the most of what you have a little bit, and understand that, even the best made plan, and the way you may do it, outside of cannabis, have to be a bit more flexible, because realistically, you're not going to have the budgets that you have outside of cannabis, and the marketing team that you kind of expect outside of cannabis, you're not going to have that in marketing, just because the priority, I think, for a lot of cannabis companies is producing a product reliably, consistently on time. And quite often, making sure they have cash flow to pay wages and keep the ship afloat. So marketing, again, I think the good companies out there have some of those things down, and they've raised enough money, and so marketing then can help separate your company from others. But quite often, realistically, that is some of the core challenges you're facing. So in marketing, you have to be very flexible. As you said, Guillermo, that communication is key, and then to work, and to try to enjoy the air supply, or the lack of air supply.
Yeah, and it comes down to, for me, you're trying to figure out, when you're in constraint, where do you spend money that has the most leverage? So is that when you think about it in marketing terms, and especially things you can measure, is that programmatic advertising? Is that billboards? Is that weed maps listings? Is that any number of different things? And if you don't have a really tight relationship where you can kind of track where you're getting the best yield out of things, and you can kind of mutually have a conversation around data to make that happen, and hopefully there's not a lot of other people in the room, which kind of crowd it with noise. The most difficult thing is when you maybe have other stakeholders in the business that want to jump in that maybe don't have the expertise, because then there's what can happen there is you just get in a sense of, there's an ideation cycle that never ends and never winds up in execution. And then there's also just something where it just makes it really difficult to come down to actually executing anything, because you could spend all day chasing ideas.
Mm-hmm.
So there's other things that come in from the outside of just the CMO and the CFO, which you really have to deal with, or it really can derail even the relationship and the dynamic just between those two people.
Yeah. And how do you work together, as a CMO and CFO, to help manage the CEO's expectations?
Darren, that's a great question. Do you want to go first?
Yeah, we'll tag team. I'll go first this time. So yeah, so basically, the way you have to think about it is, usually if you're the CFO, you have a pretty daily conversation about what's going on with the financial status of the business. Usually most CFOs have some kind of like a weekly cash flow model, to really kind of know what, especially if you're losing money and you're not break even, you're required to do that. So I think when you're having that type of dialogue, I think you have a pretty linear sense of where things are. And with that, you can probably manage the expectations of what kind of marketing spend you may or may not be able to have, how to think about that. And if they're included in that decision-making process, that's something that they have to be acutely aware of. It's if your CEO doesn't understand the financial status of the company, or doesn't understand the forecasting, or doesn't understand kind of the variance that can happen around some of those things, it's challenging. So it's really about frankly, like any C-suite title. C-suite title doesn't mean you're always the doer on everything. It just means you're educating everybody about everything and trying to teach people and train people down and up. And so it's just another part of that, just going in a different direction.
Interesting. Yeah, no, I think, look, I think with the CEO, my experience is, I think obviously getting the CEOs kind of to buy into the plan, and, getting as much insight, as I said, which is the first phase, and buying into the plan, and really kind of, and then I think just really updating on a regular basis as much as possible into how that plan's coming along. And I think, as Darren said, it's really coordinating the resource of the company to make sure that, that if one item of the plan is essential and needs to be executed, that all the company's pointing all in the same direction. If marketing is going against another department, or so I think the CEO's role is to really make sure that everything is aligned, and the marketing plan has to align with that anyway. So I think it's just making sure that my mind is always updating the CEO in terms of progress that's being made, and still maintaining the vision for what you want to, from A to B, where you want to be, and making sure that he or she can help to coordinate all the different resources within the company, to make sure that even though your marketing budget may be small, the sum of all the parts, that can be very mighty. So really making sure that everything's aligned within the company is key.
And the most difficult part about it is you have to make sure the CEO and or the board, depending on how the company's set up, has an alignment on strategy, vision, and like where everybody's supposed to be pointing to and going, and where the prioritization is, maybe between business units and all the rest. Because if you don't have that basic starting block, it's really tough for either the CMO or the CFO to do what they're supposed to do. Because at the end of the day, I'm helping allocate resources amongst many things in the company. A CMO is allocating resources and people and capital on the marketing end of things. And if you really don't know where the compass is pointed, it's really, really difficult to do that.
Exactly. And on the marketing side, Jim, what metrics or KPIs should the marketing budget be based on? What are the most important KPIs, and then how do you get everyone on the same page, looking at that data the same way?
Yeah, that's key. I think the last part is absolutely key. Make sure that all the data and all the metrics you have everyone has the same data. But I think I work for different types of cannabis companies. I think the vertically integrated ones, who have both retail and wholesale businesses, and really each of those different businesses on the retail side can be broken into, some of the KPIs on retail are different than on wholesale. So, for example, on retail, marketing is sort of judged quite often in terms of, what is, in terms of the acquiring new customers, what are the number of new customers that you've acquired, and what is the cost of acquiring that particular customer. And it may differ from programmatic to weed maps cost to to within maybe social media influencers, also trying to track those costs and associate the costs and compare those costs. And you may find, for example, that one particular channel is more expensive to acquire that customer, but if that customer has a bigger basket size over time, then that can be measured and you can kind of model that out as well. So it's really looking at, I think some of the key things on retail is, customer acquisition numbers, retention, what is percentage of new customers versus existing customers, what are they spending in terms of basket size, what does it cost to acquire that customer, what does it cost to get them to visit again. So those are some of the kind of the retail KPIs that I look at. On wholesale, it's slightly different, because quite often if you are a cultivator and a processor, you have a certain number of brands and products that you need to sell in the marketplace. So you look at, what are the sales, what's the sell through, what's the repeat order rate, things like that. Quite often you have a certain amount of product that you want to sell at the marketplace. So it's looking at price too. Obviously, if you are making one product, which could be, let's say, flour or prepackaged flour, but you're not selling that, but you're selling, kind of a more processed, or like a pre-roll or infused pre-roll for a higher price, then switching some of that out and looking at the price you get, per unit, and is it more efficient to, switch that, that flour into pre-rolls. So, the things you can look at that I think marketing insight can help on the processing side too.
Yeah, and look, having worn a couple of C hats at the same time, like there's a few wrinkles I'd add to this. It's like, first on the retail side, when I was at Eden, we grew at a 40% CAGR on the retail side. When I was at 315, we doubled sales in a year and went from negative operating margins to positive operating margins before the exit. And there's with that, the focus on making sure you're accessing and addressing all the channels. What does that mean? So if you think about like multi-channel, where if you can focus on having the right menu and the right kind of centralized things that many sales channels can drive off of. So, everybody starts off with a retail where they have walk-in traffic. How do you get the pre-order going? How do you get the delivery going? I've started with, both companies with pretty much all walk-in, and having some mix where like 50-60% of the businesses that were successful ended up having pre-order and delivery being a huge part of it. And so you're not only addressing maybe having the right inventory and everything else, but like there's a convenience customer, there's somebody that wants to be served that way or this way. And they're very different market segments. And especially when you think about, say, being in Michigan, where the weather can be terrible for a portion of the year, like some of these things become bigger moving parts. When you think about wholesale, which I've been involved with, and I'll be indescript on, it's one of those things where when you think about that business, you really have to say, like, are you trying to reach an achievable goal? What's your starting point in terms of what brand you've established? Like Eden was great. Like Eden was one of the, they didn't report to BDSA, but we're probably one of the top vape brands in Northern California. And they were one of the original players on it. That dispensary that was the core of their business had been around since 2003. And so you had a legacy following of something. You walk into a different business that's maybe newer and maybe hasn't spent the time on the market and brand creation. You start from a different launching point. And then, as you sit there and thinking about doing that, there's different parts to doing that, and making sure you have marketing for one is the key. But if you start thinking about expanding into concentrates and other types of product lines, are you setting reasonable goals? Like, are you thinking you're all of a sudden going to like launch and have 30% market share? Like, and I'm just making numbers up, but like, are you actually aligned with what is your production and everything aligned? Because there's one thing to say you want to do something and have the idea that it's great to, Jim had mentioned kind of going from flour to pre-rolls. That's actually a fairly seamless switch, but there's a lot of investment, people planning, execute, all kinds of operational execution that has to go on. Even if you wanted to recreate a new brand, just getting the packaging, like there are so many things and a time lag to be able to do that you have to really kind of be thoughtful about how you go about it and and understand the moving parts that get you there too.
That's a very good point. Yeah, because quite often it's like, let's do something different. But you're right, the packaging alone, especially if you miss kind of Chinese New Year, that can take even longer if you're sourcing from overseas. But I think too on this, because also, just looking, coming from the non-cannabis world or the pre-cannabis world into the cannabis world, you look at in e-commerce, in lifestyle fashion goods, for example, you look at kind of the lifetime customer value. Within cannabis, of course, you can get that data and you can look at it, but given the fact that it's more difficult to, the margins probably aren't quite what they are with 280E. So, the margins aren't quite there. Also to, the cost of raising capital is so much higher in cannabis too. So that lifetime customer value, it's really just like, do you have the cash flow? And how can you acquire those customers really? And of course, you look at the lifetime value, but I think some of the metrics that you look at in the non-cannabis world for lifetime value are probably slightly skewed within the cannabis values. So within the cannabis world, if that makes sense. So again, I think, you have to just really understanding the cannabis business and some of the challenges that you face you can look at those, the more traditional marketing metrics, and you to sort of, put them under the microscope a little bit too.
Yeah. And the time part of lifetime. So what is the duration of holding that customer is kind of an interesting and difficult thing to measure. I think Jim would probably agree with me. I mean, I think if you have loyalty going, and you could usually like at retail, especially if you have loyalty going, you get a measure of how much business that loyalty is driving. And so I guess there you have some element of what your stickiness is and what your recurring customer purchases are. You can figure out their number of visits. Like there's a way to start tracking some of these things. I just think it's, usually the wholesale is a little more B2B. I guess maybe that's a smaller base of people, so you can track what your stickiness there in terms of recurring orders. But, on the retail side, that's something, again, you have to have some of these metrics on your dashboard, because as you try to experiment with things, you have to see what's starting to move the needle and not move the needle.
Very
Yeah.
true. Yeah.
Exactly. And then on the CFO side, Darren, what KPIs represent success for you?
Look, revenue up, profitability up, always good things. It doesn't have
pretty straightforward. Yeah.
Like we can analyze clicks, a whole bunch of different things. Like if you're not trending in the right direction on those type of things, that's key. The one thing where I'm probably different from some others, maybe I'm not, is as opposed to measuring things on revenue return, I like to measure things on gross margin return. Because at the end of the day, gross margin is what I'm paying for whether it's weed maps or fill in the blank on anything you're going to use. Like I'm paying it out of gross margin dollars. I'm not paying it out of revenue. And so when I think about what my multiple of return needs to be able to justify that, like that's probably the most key kind of metric by which I weigh anything we're trying to do in marketing. But look, there's also brand elements and brand building stats, which are maybe probably more difficult to quantify, which you also have to respect. Because, frankly, if your revenue is going up, it's probably a function that you're actually building either your retail brand or your wholesale brand. And it's maybe a little bit more difficult to figure out how exactly to track some of those things. But that's where I think you have to make sure you're not super rigid.
Yeah, that's actually really important. That's a good point. To jump onto that. I mean, I think that too, that brand value is something, I say to a lot of my clients that I think that the companies that will win at the end of the day will have brands and or a really strong brand. And that's something which is very difficult to attach a value to. Of course, you do see valuations of Coca-Cola and what that brand is worth. And actually, I think, so there are brand studies out there, what a brand is worth, but in the cannabis industry, that doesn't exist yet. So I think, but just, at the end of the day, building brand value is something which is more difficult to associate value with and to allocate marketing dollars to. But John, I think, as you said, a successful company or successful revenue, you'll see that building that brand over time, you'll see that benefit with that. I think the other thing too is that I think again I like to work for the smaller companies and not I don't work for MSOs, but I think part of that I think too is the thing that I enjoy with the marketing is that you do have challenging budgets, but it's like how do you really take a challenging budget and really make a big splash with it? So I think the sort of creativity behind the brand that is what's important to me, and I think again having a CFO that kind of understands that that's the dynamic, and that to get from A to B you need to put a little bit of risk in there and to take a few chances and to measure them ideally and to come out from from that experience with what you've learned and what you, and then as a result of that what the path forward should be. But I think again taking a little bit of risk in marketing and throwing a little bit of and hoping that the luck is there for you to some extent is really important.
And you can take from a money standpoint, however money, resources, fill in the blank, you can take smaller risks, stop doing what doesn't work and double down on what does work. And frankly, the market's fairly dynamic just in terms of every state developing in its own way, and what may have worked 6 months ago maybe doesn't work the same way 6 months later. So you have to be nimble, because frankly we're all kind of flying the plane as it's being built.
True. Yeah, very, very true. Yeah.
And then, the big news, recently, at least on the CPG side, is liquid death, right? So, liquid death on the brand equity front, they got a $700 million valuation for a water company.
Mm-hmm.
It really just proves that brands do matter. And I know on the CFO side, we have to fastest way to profitability and maximize growth margin. Then on the marketing side, there's this other factor, the brand equity is valuation. I think the only company in cannabis that is really at that level is Cookies, right? There's not really any other companies that are at that. Yeah.
Yeah, no, I think within the, I think that's exactly true. And to me, I always say too, I think, part of things, but I've always liked to work with brands that, that when you say to people that you work on that brand, they really make a connection with it. So making that emotional connection, to me, that's a brand.
Yeah.
And I think that's always what in the marketing world, that's sort of the holy grail, is to get to that place. I think Liquid Death has got there, just from the name to some extent, but also, they understand the water crisis around the world, and they're kind of very much tied in with that. And so that's got people's hearts. And so, yeah, within the sort of, I think actually kind of the Cookies team have done an amazing job. And, we're kind of buying into sort of the Burner personality and who he is and what that's about. There have been other cannabis brands around. Actually, MedMen really was one of the first that became that. I think there are other brands out there. I think cannabis brands, and Cookies isn't this, but they tend to, the big successful ones, and something happens and they flame out and burn up. But it's just the early process within the cannabis kind of industry. And as Darren, as you said, we're building I think for like the airplane, we're building the plane, or to be like a train, we're building the train tracks and the locomotive engines and the customers and the passengers, and so it's all happening at the same time. So I think there'd be, not the Cookies won't be that brand, but the exciting thing to me is that you can become, there's white space out there at the moment, and to build a brand that can fill that space and get that emotional connection is that's what I'm interested in.
And there seems to be steps to it too, where you start with, it may just be recognition of what the product is. Like you take a Pleasantries where they have Good Enough, which is more of a value, and Jim, you correct me if I'm wrong here. And then you have King Clout, which is their upper end. And once you kind of understand that, you can kind of then go into a Pleasantries or be a purchaser of Pleasantries product if you own dispensaries, and you kind of understand where that is. Now, if when you look at that and say, okay, fine, if there's consistency behind that product within that tiering or with that understanding of kind of where it places, like that's how like repetition and time then develop the brand around that identity. Like Cookies is just further out ahead because they've always had pretty good genetics. They've always had good execution, and they always have control over the growers, making sure the quality's high. And so in the process of doing that, like they've now done it for years, have the repetition. And so therefore they are what they are. But I think everybody's trying to move down that path. Even at Eden, which curated its purchase, with always won best flower curation in the East Bay. And they actually in-house their own shelves and their own brands. And when you walked in, you knew if you bought this thing or that thing or this thing under the different names that they created, you knew where you were buying on the shelves, but you knew the genetics overall were good, and your value for what you were paying and quality there was always going to be good. So these are the type of building blocks that you have to establish. And sometimes that doesn't take a ton of money. It just means you just have to get really good at making sure your messaging's right.
Mm-hmm. Yeah, I think it's so true. I think a lot of people in the cannabis industry are very kind of connected with it, understand a lot about, the growing of the different strains. And, really from a consumer perspective, it's green stuff that, that they don't, I think we quite often, there's the industry, think that people have a higher understanding and knowledge within cannabis than they really do. And realistically, it's make it simple for people. It's a very confusing category. If you haven't been into a store and they have, different formats, is it vape? Is it, flower, pre-rolls, edibles, all have different times and onsets. And, so it's quite a complicated thing for people who are not in the industry and don't understand it. And so I think, Darren, to your point, helping people understand, what is, and also too, nowadays it's based upon price and the THC content. So, quite often breaking it down, and Pleasantries, it's sort of, the Pleasantries brand is the flagship brand, and that's, the premium brand. And then there's the Good Enough, the value brand. There's the Eighth by Rick, which is the social equity brand. And there's actually Clout King, which you mentioned, which is a licensed brand, but again, genetics from California. So everything has its sort of role within the portfolio. And I think just helping people understand, and really so often it's the bud tenders too, helping them understand what the different products are and, who they're targeted to and what the effects are. That's just the basics at this stage to help people understand. what cannabis is and how you consume it, because it's quite confusing if you're not in the industry.
Yeah, and I always try to remind myself, I've been in the industry for 8 years now, so you have to dumb it down, you need to put it in layman's terms, and THC is obviously THC and prices, they're huge factors, and then also the outcome that people are looking for, right? That's a big part. And I know that at Pleasant Trees, you've taken a different route on that, and you have branded outcomes, and you have different color schemes to signify how this product is going to what kind of benefits or what kind of outcome, or the effects of the flower or any of the other products. So I really like what you've done there, Jim.
Thanks. Yeah, no, it's interesting. That was actually the Pleasant Trees is slightly different. That's more of a sort of portfolio, but that was actually Cloud Cannabis that I worked on with you.
Okay.
Yeah, that's right. Yes, Cloud Cannabis, which again is another fascinating. But I think the vision, coming back to the first thing is the vision of the company. They really saw a gap in terms of the suburban, that sort of Metro Detroit area, and again, those customers again weren't that familiar with cannabis and probably hadn't been to a dispensary. It was kind of relatively early in Michigan. This was a few years ago now. But so we looked at as the effects, and from sleep through to sort of ecstasy and excitement, enjoyment of fun, what are the different stages, and to color code those. So you walked into a Cloud Cannabis store and you'd understand if you wanted to sleep, it was blue. And if you wanted fun and kind of going out with friends, it was kind of bright orange or red, and all the colors between it. So people could understand, again, for people that probably weren't as familiar as we are with cannabis, what experience they wanted, and how to understand it within that, all the different kind of the categories from edibles through to flower, was broken down within that. So that was a different approach. But again, I think that came from the vision of the executive team, and where they saw the opportunities in the marketplace within that market. So yeah, but that was interesting.
Yeah, I definitely want to circle back to the gross revenue topic there. And with the what would you say, like, the suggested percentage of gross revenue that should be put towards a marketing budget?
Well, think of it. If I think about it, it all depends what margins you're probably running as well. I've worked in businesses that can print north of 40% gross margin. If you're doing that, like, I think, given the fact that most retail can probably run in the mid-teens on labor, right? So if you're thinking about it just on the retail side, and then you got brand, so if you're really working towards break even, it tells you how much you really have to work with. So if you're 45% gross margin, can you be up to maybe 5, possibly 10%? Because you're dealing with 280E, so all of a sudden you take 40 and you take 20% away from that, so you're back down to like 30, 32, right? Once you get into getting taxed at the gross margin level. So you have 32% to play with before you get to break even, right? So if half of that, it depends what rent and what your labor is, plus maybe whatever the miscellaneous, the software, like if you have to have your POS system, all the rest. But like, I think when you end up doing all that math, you end up in like the 0 to 5% range, depending on what you're doing. The math kind of working it down. Mm-hmm. So, and I think most people right now are probably trying to get to that break even level. Mm-hmm. On the brand side, like, let's talk flower just because it's easier and people usually know the price per pound where they live, right? Your cost per pound to produce, and I'm talking all in, including your fixed cost of your facility and everything else, because a lot of people kind of quote it as only the variable. I'm going to bet is anywhere from $600 to $800, depending on who you're talking to, right? There are people that'll tell you they do $450, like maybe there is somebody that's doing that, but if you actually count the facility and everything else, like, which most of those are financed with debt, you have to think about that differently. But if you're doing that now, if you're able to sell at $1,100, $1,200, $1,300, like, you have some budget, because you can sit there and support your brand, whether that's, vendor days, any number of different things that you can do to try to support your brand. And I'll let Jim speak to what those should be. But, if you haven't really established your brand kind of in the first couple of years, usually in a market where the pricing was really good and you actually had the margins to support that, and say you're selling it 700-800 and you're producing for 600-700, like your ability to market that and stay in a break-even lane gets very different. So like, I'm not giving you a straight answer because it really kind of depends on where you're toggling. But I guess the key part of what you need to do well for people that are in markets that are about to open up is if you manage your budgets well and you actually do the right things to build a brand out of the gate when you have that first couple year window where the pricing is usually pretty good. That's key because you're basically just trying to maintain that base, because it seems like all these markets go through, like after 2 or 3 years, go through some sort of an oversupply scenario where prices compress. And then it really becomes down to like, where like when prices compress, brands become important because brands all of a sudden let you charge the premium. And so if you haven't built that, trying to come back the other way and build that in an environment where it's tougher to stay break even, like that's where you end up having your issues. And I think there's probably a lot of companies trying to confront that balance and trying to figure out how to strike that equation. You know, I don't know how Jim feels about kind of those metrics, but those are the ways I'm thinking about it as I approach looking at a business.
Darren, I mean, you're much better than me on breaking that down in terms of percentage for stores and labor, and you know, so that's obviously much. But I think what's really interesting is you're 100% right that a lot of people. I was just talking to somebody in actually who's an operator, was going to be an operator sorry, I can't say it for a minute, but in actually New Jersey. And yeah, just helping them understand, I think that to your point, that the first couple of years in the new marketplace, so the margins are high and the pricing is higher, the supply and the demand, and there's more demand than supply. So the pricing can be relatively high. And then after really a couple of years, you said, the cycle comes in and the supply is there, the demand really hasn't, you know, kind of increased as much as the supply. So prices fall quite dramatically. And I think then you have sort of brands, you know, if you built a brand in that time, then you can charge that premium amount. I think helping people understand that is key. So coming down to in terms of, you know, how you, you know, what allocation you make towards marketing. I think as you said, Darren, between 0 and 5%. Hopefully it's not 0 because it's not much fun for marketing. But really in that range is sort of, you know, really, I suppose, yeah, in the cannabis realm, that's the range that I'm used to kind of working within. Not 0, but up to 5%, let's put it that way. Yeah. You know, but outside of cannabis, I think, you know, it like any company, and again, to begin with, you're launching a brand, you need to spend to get that brand out there. But really aligning on what the marketing plan is, who that customer is. There's no point, you know, kind of creating a marketing plan without having a specific customer in mind. And quite often, you know, within the cannabis industry, like, well, everyone is my customer. Well, if that's your approach, you're probably not going to build the right brand. So really understanding who your customer is, what is that customer insight, what's the need that you're fulfilling for that customer, and coming back to spending, really just aligning everything around that particular focus. I think that's key to be successful. But yeah, I think, you know, really doing the work behind the scenes in terms of what that brand is, you know, what that means, what their value proposition is key, so that when you do hit the ground and when you spend behind it, you know, there's a lot of good thinking behind it. I think that's really important too. Yeah, Darren, I know we talked earlier about, you know, quite often sometimes it's just the name, and then it's getting the name out there. That's sometimes people's approach, but I do think to some extent, you know, you really have to put the groundwork in behind the brand, but to some extent you have to get it out there too. And you know, then you'll determine where it fits in the marketplace, you know, and then within the cannabis industry, you have to be very adaptable to make sure that it works effectively. Yeah.
And think of it, especially when you're a retailer, it works in a few different ways. Is that if you're buying branded packaged product, like the premium you're paying for that, because they've branded it and putting their name on it, it better move off your shelves. If that's not happening, like you have to start thinking about creating your own internal branding tiers and starting to wholesale purchase, because you're basically embedded in that, you know, purchased packaged product is some element of marketing that you're expecting to have paid for from the vendor that you're buying from. And if that's not actually materializing in velocity in terms of your sales, you have to think about that and what that means, and maybe what your strategy needs to be, maybe to buy things cheaper, but maybe you're going to figure out how to spend the marketing dollars because maybe they're not as effective, right? So that works. The thought process behind that works in terms of who's selling to you and making sure they're doing a good job, but also you as a buyer on the other side. And then frankly, just, the operational efficiencies that you can create that increases that margin, moves that number that Jim is talking about way closer to that 5% number and possibly beyond. And so there's a lot of moving parts. And if you're just not running the business well and efficiently, you're handicapping your ability to do things that are probably very good for your business.
True, that's a good point. I think on the retail side, given the fact that you have a lot of people, and the more mature the market, you have a line of people at the door trying to get their product into your dispensary. So really kind of working with them, and nowadays the wholesale marketing is getting much more advanced. You have to go to the retailer with a media plan of support. You have to go to them with bartender training all wrapped up, and all the different obviously website completely, all the sales material, and what you're doing to support them. So you're looking for some of the products to help you fund your marketing. So you may have a 5% budget, but you also may be able to get another few percentage points from some of the suppliers to help really kind of support, drive customers in and get that retention piece as well. So so leaning, I think retail nowadays leaning on, leaning sounds bad, but really kind of working with, doing a sort of, approaching the marketing in a very cooperative way with some of the products that you're selling is so important too.
Yeah, and look, I know in California, I saw it, I think it's starting to happen in Michigan to some degree too, people basically selling their shelf space to different brands.
Yeah.
Now, while that is something that could be deemed profitable right out of the gate, given what you're doing, if you're selling it to something that doesn't move, like retail is about two things. How many times can you turn inventory dollars in a period, and what margin are you doing at? You could have a gazillion % margins, but if it's not turning, it's not showing up on a dollar basis. Because so you have to be kind of careful, like with the dance you make with selling shelf space, because at the end of the day, velocity is a super important part of the equation. And so you may sell shelf space, but it ends up kind of biting you when you think about the math.
That's so important. True. Yeah, making sure that when you go to that store, there are products there that you want to buy, and sort of having the best products is key too. Exactly.
Yeah, and circling back to the brand value, I know it's we talked about liquid death and how crucial part of the marketing strategy the brand value is, but the results it can be hard to quantify, right? So like Darren, on the financial metric side, like how do you measure or analyze brand stickiness?
If you're managing your inventory, I'll answer it from the wholesale side and from the retail side. Retail side first. Like if you're running your retail inventory correctly, you're looking at the velocity of what brands are selling at what rate constantly, because you always want to be testing a new brand and swapping out the low performers with the high performers, and using those metrics as a way to talk to your vendors about getting more support. Because if they want to be on your shelves, especially depending on how many stores you have and how much scale you have and kind of buying power within that, you should be able to leverage the fact that you've got great tracking of what the velocity is, and you can be basically holding your vendors accountable to that. On the other side, there's hoodie analytics, pistol data, all these other different things on the wholesale side. And you can tell where you're being priced versus not. You can tell when you're stocking out, but frankly, you can usually just tell what your reorders are. And if your salespeople are switched on, they're giving you feedback to what's happening. And so you have to look at are you constantly churning customers on the wholesale side? Are you constantly selling to new dispensaries, or have you really set up relationships and supportive relationships and kind of symbiotic relationships with the retailers you're selling to make sure that product's turning, you're giving them support. And, if you can get yourself on a recurring order basis, both as a retailer, because the supply chain works out better, and frankly, very much so again, as a wholesale operator, and you have those dynamics working and you're partnered with marketing to make sure that those wheels are turning the right way, you're probably going to have a successful business.
Agreed. He's really, really thinking about all the retailers that are in survival mode right now, and brands. It's not new news. Right. So most businesses pull their marketing budgets. And businesses are struggling right now. They're trying to get over the hump and continue to grow their business. How can you make an impact in marketing and acquire new customers with less and less marketing dollars available?
Well, I think that is a challenge that a lot of people are facing now. And as Darren said earlier, sometimes just by cutting that budget, you get even further into a hole because you're not getting new customers in, you're not getting retention. So again, I understand people cut marketing budgets, and that has happened. How to get around that, I think obviously is focusing on understanding what you're spending and where you're spending it and what you're getting the bang for your buck at. And I don't believe necessarily as there have been some famous quotes about marketing that not exactly sure why it's successful or what is successful, but nowadays with digital marketing you can really go down into what is that cost of acquisition of new customers, and so you can really measure some of these aspects, and some of the data out there is not right, and so really digging into the data, understanding if it's correct or not, I think is key. But getting a better understanding about where you're spending money and how efficient that is important. But then I think outside of that, on the retention piece, for example, I think what's so important is to get customers coming back in, and that's 70-80% of all the of the revenue is getting those customers to come back and visit again. And looking at just a retail marketing calendar, it doesn't cost money to create a retail marketing calendar. It's pretty much free. Well, your marketing team have to do it for you, but understand that customer, understanding what they like. Pleasant Trees, for example, is one of the best growers in Michigan. So, we know our customers in our stores. As soon as we have a new strain that we're launching, or a fresh strain that we haven't had for a while, we tell them, and they have exclusivity in our loyalty club for one day to get that strain. That doesn't cost any more money, but it's getting people to come in and do an extra visit. If you can get those customers to do one more visit a month, or one more visit a week, or to buy one extra product a week or a month when they come in, that's going to increase the margin. So I think it's, you have to look at, how within the budget you have, you can maximize that, but then within the retention piece, and how you can be as creative as possible and understand that customer to increase revenue. So it's not all about the budget. Budget does help, but I think, as Darren said, with the sort of the $1 million or the $1 trillion marketing budget, you could probably spend it all. I would like to try, but you could probably spend the whole budget. But would it be more effective the more money you have? So I think it's digging into it and being understand the customer and giving them what they want as much as you can.
Yeah, look, as it gets more difficult, you constantly want to sit there and figure out where you're spending money that has the highest yield. And that's really what it comes down to. And things that are leverageable and repeatable, like on the retail side, like things driven through loyalty and discounting, and different things that come out through loyalty tend to create stickiness. Like I've generally seen that can be north of 60% of somebody's revenue, just the loyalty customers that are a consistent base. You can give away things through it. I think giving things away, I've walked into things where you're giving things away but not getting anything in terms of retention for it. You want to stay away from the transient discount shopper. And like when you think about different markets, like California had a higher affluence level than Michigan, so it was much less. It was much more quality centered, or the perceived quality centered versus price centered, which I found the value and the price centered part of the Michigan market was a little bit different. And so you have to kind of make sure you know your market and what you're trying to address. And like, at the end of the day, like there's a high frequency user and they have a price point. Like, are you serving that customer and that high frequency user? Because, as a retailer, there's velocity and margin. And like, if you can turn a ton of velocity, you can do a slightly lower margin and still on a dollar basis do much better on an overall margin, a dollar basis margin. The key is, and it's where we started with, you have to have the right metrics to track, to measure. Because if everybody just has an opinion about what they think and why they think it, and none of it is based on anything, which I've seen happen too. Like it's just chaos, and then you're never actually going to figure out what the real answer is. And you really have to, when you think about overall teams, you have to really look at people that, you know, are receptive to using data, and then people that aren't receptive to using data. And you also then have to realize, like, skill sets, like who's in place here to understand how to use that data correctly. How much can you teach people in order to kind of go down that path, and how much you can't, and kind of assessing that and making sure you have right people in right seats and domain experts that kind of understand these things. And frankly, across the organization, because you're going to have to coordinate with everybody, and you're going to have to get consensus building and buy-in for that. And so if you have a team that won't kind of congeal around those things, it's really tough to be nimble, especially in an intelligent way.
Yeah, exactly. And then, I mean, Darren, I mean, let's hear the dirt. I mean, what is your perspective on the value of marketing as a whole? You know, we want to hear the war stories, the good, the bad, and the ugly that you've come across in your career.
Look, you know, having started in the business in 2018, I think on a relative basis is a fairly early stage, and seen a few markets mature. Like, you know, marketing is infinitely valuable, but making sure, given the fact that, like, a lot of times the money you've raised at a business is to build out a new dispensary or a manufacturing and distribution center or a whole bunch of things. Because the one thing, this isn't a SaaS business. This is capital intensive. Like, everything you do requires purchasing something, having hard fixed assets, and spending money to have them. Like, cultivation facilities fit right in that bucket 10 times over, more so than all these other things. And so if you really want to get the right leverage on them and get the right revenue and margin out of these facilities, you have to throw some lighter fluid on the fire. And so the key is just making sure you like, as a CFO, you have some more stories about, like, hey, like, what's the marginal yield on the price I should pay on a Weed Maps listing, and how do I calculate that out? Like, you know, I've seen, you know, I was in California where we didn't use it at all, and it never affected our business. I've had different locations where, like, you know, we didn't decide to get a pin for our thing, and that clearly affected what was going to happen in the business. So you have to kind of have a few battle scars to kind of know where the right place to put the money is. And again, you need to be partnered with a CMO that understands the metrics, because at the very least, it's just a basis for a dialogue. Nobody's, like, you know, put it this way, you can wind up in the Hall of Fame in baseball with a 300 batting average, which means you got on base 3 out of 10 times. All right. And I kind of look at it as, you're going to make some mistakes. So do you have a culture where people can take risk in a small way, fail, and not get canned because they've stuck their neck out to take risk? Because in something where everybody's trying to figure it out, because it's a really new business, it's an interesting startup business with a huge install base of users, but you're still trying to figure out how to address those users. So you have to be able to take risk. You have to be able to do it in a measured way. You have to be able to measure what that risk is. You have to have a risk tolerance for it. You have to not shoot everybody as soon as they make a mistake. But it's really about kind of, you're inching forward, and you continually learn. If for every place that you work, you end up coming in with, well, I already know that this is kind of the way this ends up working. And then you can sort of avoid some of the initial mistakes, whatever the next venture is.
Yeah. I mean, thank you both, Jim and Darren, for, you know, sharing all this information with everyone. Can you like share, you know, where can people find you if they'd like to reach out, ask some questions, or just connect with you in general?
Sure, Darren, you want to go first?
Sure. I'm on LinkedIn, and I reply to most messages there.
Okay.
You know, that's a really good place to start. And, you know, if you try to connect with the message, I'll odds are I'm going to reply to you. So it's a good way to do it. It's a good way to leverage that system too.
Okay.
Sure. And I think just similar to Darren, I'm on LinkedIn too, Jim Anstey. Just search me and I should come up. And then I have my website, which is bklyinc.com. So bklyinc.com. That's my website, and there's contact buttons there. So yeah, anyway, I'm sure you.
And one thing I would say is my name's tricky. It's GACICIA, which is Gachicha.
How do you pronounce that?
Gachicha, and that's why, like,
Gachicha.
you know, I went to an all boys school in New Jersey. I got nicknamed by my hippie English teacher in 7th grade, and I've been Cheech ever since. So it's directly derived out of that. Just so happens I wound up in cannabis. Go figure.
Full circle. I love it. I love it. Well, once again, everyone, thank you for logging in today and joining us. This is the Cannabis Marketing Live podcast sponsored by Mediajel. You know, we cover the latest marketing trends and strategies for growing your cannabis business. The next podcast will be airing live in a few weeks here. So just keep an eye out, and we'll be talking about Q4 holiday marketing tactics that can make cannabis cash registers sing. And that's going to be with Lisa Buffo from Cannabis Marketing Association. So definitely tune in for that. Everyone have a wonderful rest of your week. Stay safe out there and enjoy the holiday weekend.
Thanks, Guillermo.
Cheers.
Cheers, Darren.